And now the gentleman from Florida, Mr. Posey, is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Allaire, you begin your testimony today talking about China's currency. Do you see any comparison between that and the central digital currency that the President has proposed in his executive order?
I'm sorry, I couldn't hear the last part of your question because the door opened.
So do you see any similarity between the Chinese program and the central currency that President Biden included in his executive order?
Thank you for the question, Congressman Posey. I think what the Chinese government has pushed forward with is an entirely state-run and administered digital currency program. It has with it significant embedded surveillance capabilities, and it's clearly something that the Chinese government seeks to export around the world as part of its desire to grow the role of the yuan internationally. I believe your reference to the executive order from President Biden was around studying central bank digital currency in the United States. Our view is that a similarly designed retail, government-run and administered central bank digital currency is not needed in the United States, but we do believe that there are critical improvements to be made in the core infrastructure of the dollar itself within the Federal Reserve System, what sometimes people refer to as wholesale infrastructure for this, and clearly central banks around the world are all exploring that. But I think this separation between those institutions that are delivering financial services directly to end customers and the government is a kind of air gap that is important to preserve for privacy, security, and market competitive reasons.
You can understand a concern of some people that if private digital is competing with government digital, guess who's going to win? It's never going to be a level playing field, and more levels of regulation isn't going to help. I mean, we know the SEC, the biggest fraud in history for 10 years they were informed about it. So, more regulation is not going to fix the fraud that we endure. And there's also concern, when you have a central bank digital currency, and like China has, the government knows every penny that you spend. They can slow down your flow of funding. They can cut it off, or they can take everything that you have. And I can understand the legitimate concern that some people have about that. How should investors evaluate liquidity risk of digital assets compared to banks?
So specifically on stablecoins, what this bill does is specify a very narrow base of important high-quality liquid assets that must be held on a fully reserved basis, the most liquid dollar instruments in the world. And a digital dollar that is held to those reserve standards is dramatically safer than bank deposits. Bank deposits hold 1/12 of the deposits. The remainder is lent out. We see risks from fractional reserving. And the mixing of that lending behavior and payment system behavior has, let's just say, bitten the American consumer and business many, many times historically. And so this bill, I think, helps to define and create the safest digital dollar in the world, which is what the American government should be getting behind and making that an important export product on the internet.
How should the regulations for stablecoins compare to the capital regulations for banks and money market funds?
So in the stablecoin bill, there are recommendations for federal regulators to look at capital adequacy, to evaluate key activities around the risks of an issuer, and I think that's appropriate. There should be capital buffers to deal with it. But unlike a bank, which is rehypothecating and lending and fractionally reserving, these are very, very narrowly held. And so the liquidity requirements and therefore the capital buffer requirements are likely going to be significantly lower. And so that is left to regulators to determine, as opposed to being highly prescriptive in the bill. But I think it's a very important and necessary piece for this to ultimately go into effect.
Thank you. Mr. Chairman, my time has expired. I yield.